In this video, I'll show you how I'm using this current market volatility to lock in 7% yields on symbols that matter. The whole idea revolves around using the current dividend, the heightened implied volatility, what is the income you're getting, what kind of dividend history do we have here, has it been growing, and then bring that together with the options chain and our recent conversations with negative gamma, clean this up, and end up with a list of stocks that we can pay attention to. Now the process is really simple and I'll take you through it in this video. We'll start by first running our dividend yield scans. The idea here is to find stocks. I'm going to set my minimum threshold at least a 7% minimum yield for this conversation. If you want to know where to run these scans, we have free scans available for the Thinkorswim platform. I'll leave a link in the description box, or you can even use free services or stock screeners. Step 2, once you have your list of stocks, is to then put these through a filter. My filter criteria are primarily around avoiding any stocks still near 52-week highs. After the market has corrected nearly 10%, I'm looking for stocks that have corrected at least 10%, if not more. And there we want to find where do we still have consistent dividend growth. Bonus if they're part of the dividend aristocrat family. Finally, once we find these symbols, then we can bring that together with the options chain and craft together a trade idea. If there's dividends coming up, then we might want to just outright buy the stock, wait, and do nothing. If there might not be dividends coming up, then we might want to buy and maybe sell a covered call against it, maybe buy via a cash secured put instead. Maybe there's other ways to enter the position where we can make our entry better, especially if there's no upcoming dividend. With that, let's start with step 1, which is running the scan. Now we start by coming inside of our Thinkorswim platform, and I'm going to focus on some quality stocks, and I'll deem that with the S&P 500 as my watch list that I want to focus on. If you want a different watch list or you want to expand this, you can do so here, and you can even pick and choose something wide like optionable. The scan may take a little longer, but you can still run it and have more candidates. Now you'll see inside of our dividend yield scans at the very top, I have the threshold, which is set to 7%. If you want to change that up here. Once you have that set to 7%, I'm running this on the daily time frame inside of the S&P 500. I can click scan, and I have 5 stocks in which our dividend yield is currently greater than 7% inside of the S&P 500. Hopefully you saw just how easy that was and how you can tweak this, add in other technical analysis filters here if you want. Now let's take a look at these 5 stocks. We have Walgreens, Dow, Altria Group, tobacco stock, which we know is known for good dividends, LYB, and then ACGL. Let's start with Walgreens first. If you remember, we had said we want to focus on stocks in which we haven't made new 52-week highs. That's surely not the case here. The first dividend should have already kicked in by February inside of Walgreens. We're not seeing that, which tells me that Walgreens has most likely halted dividends without even digging into the news history here. So Walgreens is a stock that I'm going to skip. Move on next to Dow. Now inside of Dow Inc., this stock looks very interesting. Let me load in our dividend yield analysis indicator. I'm going to load in the pro version, which for all Volatility Box members is included with your membership. And let's get rid of some of the other indicators we have up here for right now. And I'll come into the daily time frame. The signs still point like we should have a little bit more sell side activity, but where this gets interesting is if you take a look at what the history is telling us, our yield is breaking levels that we have yet to see. Previously, our max was around that 6.3% yield when that was mid 2022 with the sell-off. And you can see how we bounced from there. I think there's a little bit more sell side activity, but we're now breaching yields that we haven't really seen. So as long as Dow Inc. doesn't pause its dividend, which so far it doesn't feel like it has any intention to do, this is a stock worth adding to my list. Next up, we have Altria Group. Now, Altria Group does not really meet my criteria of not being near 52-week highs. We're still pretty dang close to our all-time highs. You might argue that this is still breaking above the trend, but I think Altria Group needs to cool off a little bit more, maybe below 50 before it gets interesting. Still interesting at that 7% yield mark though, greater than that at 7.08, but you can see here that Altria Group has breached close to that 10% mark, which is where you might be a little bit more excited about it. Next up, we have LYB. If we take a look at LYB, the chart here looks quite similar to our Dow Inc chart. We can see the previous yield has touched about 10-ish%. If we come prior, 10% seems to be where we tapped out. And if we can, the dividend yield has also been increasing here. You can see that $1, 105, 113, 125, and now we're at 134. So LYB, another stock along with Dow Inc that I would add to my radar. Some really nice yields right now for you to lock in 7% while then wait for the stock to actually appreciate and take advantage of the stock being near lows. And then finally, we have ACGL. ACGL, this dividend looks like a one-off, so not really meeting my criteria. So we ended up with, out of our list of 5, we went through, we filtered this down to 2 stocks, Dow Inc. And then LYB as the 2 places where the dividend looked juicy and we could still take advantage of this with a price edge. Now we come into the options chain, see what that's telling us. Now, Dow Inc., the first place I'd like to start is by looking at the IV percentile. 58% on the IV. And if we take a look at LYB, 47%, so below that 50 mark. So if you had to choose one of these two in terms of where the options have more premium built in, where you might want to be a seller, Dow Inc. seems to be it. Now we come into Dow Inc. and it feels like we just missed this recent dividend. So now I'm trying to find ways to enter this position without really having any kind of real urgency. My next urgency, if we zoom out, our first dividend tends to come, somewhere around March. We hit that early March. So the next one we anticipate is towards the end of May, beginning of June. So we use that information to pick which options expiration cycle do we want to play with. Now we said end of May, beginning of June. So the May monthlies are the ones which I think are the furthest dated expiration that you could still get excited about. Now here, this 35 looks quite interesting if you were happy at the current price. It gives you nearly a 3% yield for 54 days for waiting, a break-even price of $33.85, which is better than the current price. And at $33.85, if you were to recalculate the yield at 70 cents times 4 periods, so $2.80, but we said that our new break even would be at $33.85. So we could divide this by 33.85. That would help you increase your yield up to above 8% and make Dow Inc., I think, a much juicier candidate and a way to enter this overall idea of trying to take advantage of the dividend yield, capture a little bit of premium while you're waiting. Now, the key sign for that is we need to see some triggers here where price is stabilizing. I've shared many setups of that before, so I won't go into that in more detail, but that gives you an idea of then you'd be looking at something like the at the money, which right now is the 35 in this May monthly expiration series. Now, if we repeat the same process for LYB really quickly, and you compare the same premiums, notice how the yield is a little bit less. We can see that right away. Less juicy premiums, less juicy yields. We're also spending a lot more. This is requiring nearly $7,000 of capital compared to what we had with Dow Inc., which was at 35 compared to the 70. So nearly half the capital. We're collecting similar yields here, 109, 120. LYB, if we were to contrast that at the 70-ish mark, is just marginally greater in terms of the amount of dollars you collect. So I think DOW, Dow Inc., is the one that I'm paying attention to lock in 7% yields. Now in this, we looked at just a small watch list of the S&P 500. Next steps for those of you that resonate with this idea would be to expand the watch list. So you might load in things like just the NASDAQ stocks, rerun this, go through the exercise to pick and choose where you're actually finding a handful of stocks where you're interested, then start to analyze on slightly larger time frame charts, find a price level that you're comfortable, say, building some entry position in, and that gives you the place where you can now use the options chain. I hope you found this video helpful. For those of you looking for some dividend yield ideas, one more time recap, we used our free dividend yield scans. We scanned for a minimum of 7% dividend yield. That we did inside of the S&P 500. That gave us 5 stocks. We went through these 5 stocks. Walgreens didn't look interesting. Altria Group looked interesting, but near 52-week highs. Dow Inc. and LYB were the winners here. And out of these two, if you had to pick one, Dow Inc. was the one that had juicier premiums, and we're just waiting for that trigger to actually tell us that, hey, now it's safe to get in, and we know the expiration cycle. At that point, we're just looking for what is the at the money put to sell. Take care, everyone. Good luck trading, and I'll see you in our next update.